What's up, YouTube? Broke Investor here, making another video. But today's focus is the top 10 reasons that you should be a dividend investor. So let's just backtrack here. What is the point of my channel? What am I doing? I'm a dividend investor. I got into stocks about a year and a half ago, and shortly along that way I quickly changed my idea of investing just strictly for dividend income. So I've been, it's been like that for over a year now. So I mean, I believe in it, I love it. So today I just wanted to give you guys, if you're not into dividend investing, or if you want to be a dividend investor, or if you're just watching this video for the hell of it, I just want to give you guys what I believe are the top 10 reasons that you should be a dividend investor today, and for the rest of your life. So let's get to it. Number 1, income. Oh my God. Clearly cannot spell. Income. There you go. So that's number 1. Obviously, everyone goes to work. They make active income. They have a retirement plan, they live on, and they die. The idea of dividend investing is to make income, additional income, known as passive income. So basically, you buy the stock, you wait there, you sit there, you sleep, and you make money. So it's another form of income that you're not actively working for. You're just sitting there. Again, make money in your sleep. You've heard that term before. That's number 1. It's to make income, obviously. Don't you want income? All right, number 2. Again, this it's basically top 10 reasons why you should start to be a dividend investor as of today. And today, all information is available online and for free. I mean, YouTube, Google, whatever, podcasts. Just go, just look up anything and the information is there. Obviously, there's paid information too, but regardless, it's all available to you. Back in the day, it was really hard for people to learn about investing in stocks in general. But now there's really no excuse. This goes for anything though. Everything's available online, so you can learn pretty much anything, which includes dividend investing. Number 3, it's less risky. Why is it less risky? Because being a dividend investor, the idea is you buy the stock and you hold it forever. Keeping that in mind, you're buying a stock for a company that most likely has been around the block, been through some market crashes, and has paid the dividend throughout all of that. So obviously, when you invest in a company like that, a blue chip stock, there's a lot less risk with that. So you're investing in companies that are going to pay you dividends until you die, essentially. So you would expect a lot less risk. Number 4, better return. So what I mean by this is, a better return than your typical savings account. I mean, what are savings accounts paying nowadays? 0.01? I mean, what are CDs paying? Something pathetic. And that's, locking up your money. When you invest in dividend-paying stocks, the yields typically start around 2 to 3%. Right off the bat, you're getting paid money a hell of a lot more than what the bank is. Not to mention capital gain. So capital gain plus dividends, the return is, endless, so obviously that's an obvious one. Number 5, drip. So what most people do when they invest for dividends, they reinvest them through the drip option, dividend reinvestment plan, and not all brokers offer that, especially this one right here, Robinhood. They do not offer the drip option. So when you get paid your dividend, it just goes to your available balance, and then you just have to buy the stock yourself. What's good about drip is it reinvests it into the stock. So if that dividend does not buy you a full share, you get a fractional share. So a lot of brokerages do offer that, and that's pretty good. And actually, you do get a fractional dividend too. So if you own a fractional share of the stock, you get a fractional dividend. It's pretty cool. So that's another reason. It's automatic. You buy the stock, you buy, say, 20 stocks, you just reinvest them and you let them do their thing. Number 6, you never touch capital. So you're making money, you're making dividend money, and you never touch the capital. So you invest money into a stock. You're hoping the capital goes up, but you don't care. You're not touching that capital. So you're making money on just giving them money, essentially, right? So that's the beautiful thing. You're putting your money away, not touching it, and you're getting paid dividends. Here they come, but you're never touching the capital. Your capital's going up and up and up, again, hopefully, but you don't have to touch it because you're getting paid dividends. So that's another one. Number 7, raises. This, again, goes back to the active income conversation. Nowadays, companies are pretty cheap on raises. So some companies have a wage freeze. Keep that in mind. When you have passive income, you're not doing anything. So you're getting raises for not doing anything. You have your money into the company. They're giving you a dividend every quarter, every month, whatever. And then every year, most of them are giving you a raise. And a pretty good one at that. 5, 10, 15%. That's great. So imagine when the money that you have in there just keeps compounding and compounding and compounding. And you have, say, $50,000 into one company. You get a 10% raise. That's legit, So, again, there's raises. A lot of raises if you invest in especially the dividend aristocrat companies who have given raises over the past 20, 30, whatever years. And again, that's throughout bad economic times, market crashes, etc. Number 8 is it's very simple. I mean, investing in stocks is very complex. It's very intimidating. Being a trader, stupid if you ask me, but it's not easy. It's really hard to make money being a trader. But when you're an investor, especially a dividend investor, the idea is pretty simple. You want to invest in, big companies that pay a dividend and have paid a dividend, year after year after year, and increase their dividend year after year. And these companies, you want to make sure they're actively making money and they're actively going to be safe in the future. Like, it's something that has to be that, it's just a company that people need. Like Coca-Cola, like, people are going to drink soda. As bad as it is for you, they're going to drink soda. They're going to drink those products, Pepsi, whatever. It's just going to be there, They're going to make money forever and ever. Procter and Gamble, again, if you go and look at the dividend aristocrats and you look at those companies, right off the bat, most of them are pretty secure. But obviously you should do your own research. But my point is, the idea is simple. It's not complicated. You invest in secure companies that'll last forever, pay you dividends forever. That's it. That's all you really care about. Number 9, it's free. What I mean by this is nowadays, you can buy and sell stocks for free. The idea of being a dividend investor is typically you're just buying the stock, right? You're just buying a stock. So nowadays, if you use Robinhood, you get free, you could buy a stock for free. So obviously you just have to invest the money that you need to own the stock. You're not paying $5 or $6.95, whatever the hell it is, per transaction. Again, another intimidating factor is those fees. So back in the day, again, that was not available before Robinhood came along. It was always a fee. There was always a transactional fee. So you'd have to save up a hefty amount of money before you even buy a stock, because you might as well buy in bulk if you're going to pay $6 fee. So again, another number 9 is it's free to buy a stock. Number 10, and the most important one to me, is your family. What I mean by this is, again, the idea of dividend investing is you invest in stocks that will pay you dividends until you die, right? You will never touch the capital. So that means you're going to live off the dividends, never touch the capital. Eventually you're going to die, right? So if you have children, if you have other family, you're going to leave this to someone, and then one day they can also live off the dividends. Or they'll just sell everything and blow it. But the point is, if you have children, you can teach them about this method. You can have them already have a portfolio. I know I did for my son. He's 3, and he has a whole bunch of dividends rolling in. Where else am I going to put the money? In a savings account? No thanks. So the idea is, you teach your family this, and assuming all is well, they'll get your dividend income one day, and they won't be stranded. They won't be broke like the most of America nowadays. You'll leave them pretty comfortable. There'll be a nice little chunk of money for them. Hopefully they deserve it. If not, they'll give it to them. But it's a huge benefit. So imagine just getting free money. It's free money. Obviously you're putting money into it originally, but it just sits there. You don't do anything. You do the analysis on the company, but that's the end of it. It just sits there. You're getting money for doing nothing. Again, I just wanted to make a top 10 video because those are always fun for people. Top 10 reasons to be a dividend investor nowadays. Why the hell not? Everyone loves passive income, making money while you sleep. Active income sucks because you have to go to work and make the money. You have to physically be at the job to make money. You need to find other ways to make money, and dividend income is, one of the easiest ways to understand, and it's just available to you. There's so much information out there. So get off your ass and just look into it. Right? Why not? Anyway, I'm not a financial advisor. I'm just an elf, just sharing my advice with the Giants hat. They sucked this year, but oh well. Again, just sharing my advice. If you have any other reasons to be a dividend investor, please comment down below and let me know. If you don't agree with any of these, comment down below. Click like, click subscribe, share the video, please. All right, more videos to come. Thanks for tuning in. Have a good one.